All right, we're going to do cost exercise 10.58, and this is a cash budget, and we're going to include the financing effects on that. So, so this really and truly, this is nothing more than an inventory problem with a minimum inventory required. And so this problem asks us that to begin a cash budget for November and December, and it assumes that the beginning cash balance November 1 will be 75,000, and it's a company policy to maintain a cash balance of 50,000 at the end of each month. Okay, so we'll start off with just make two columns, November and December, and we'll begin with beginning balance. Now, we're told November's beginning balance will be 75,000. We don't know December yet. We'll have to calculate that much. Okay. It says that cash receipts from cash sales and collections of accounts receivable are projected to be 525,000 for November. And are expected to be 450,000 for December. Okay, so that's going to give us cash available for November. We won't be able to do that for December yet, but cash available for November will be 600,000. All right. Then it says that our cash disbursements for sales commissions, advertising, delivery expenses, wages, etc., are 450,500 in November. And is expected to be 550,000 in December. All right, so we subtract that out and we get 149,500 there as our tentative balance, right? And we go ahead and say tentative balance. Now, also going along, it says short-term borrowing when needed is done at the beginning of the month. That's why we use this tentative balance thing. As of November 1st, the company has, it is in increments of 1,000. The annual interest rate on such loans is estimated to be 12%, or that would be 1% a month. Makes it easy to calculate. Interest on any outstanding short-term loans is paid at the end of the month. Repayments of principal is assumed to occur at the end of the month. As of November 1st, the company has 50,000 long-term debt loan from a bank. This loan includes interest at 12% for the month of November, and is payable at the end of November. Okay, so now what you need to do at the end of this is you put in your financing terms. So your loan proceeds, and since we have more than enough to cover our 50,000 needed, we don't need any loan proceeds in November. Because we only need 50,000, and we're going to pay loan payments. Some people combine that in just loan effects. That's going to be 50,000, and then we're going to have our interest payment. And that'll be 1% of 50,000 or 500. So put those in parentheses. And so if we subtract that out, we end up with an ending balance of 99,000. So November's ending balance will be December's beginning balance. So that'll be 99,000. We can put that up there. Add those two together. We get 549,000. Our cash disbursements are expected to be 550,000. So our tentative balance is a negative $1,000. So that's not going to be able to happen. So we're going to have to borrow money. And remember, we borrow in increments of 1,000. We need an ending balance of 50,000. So that would mean at least 51,000. But remember, we have to pay interest every month on that. And so the interest is going to be at 50,000 would be 500. So at 51,000 would be 510. We would go below the 50,000. So we're going to need 52,000 in loan proceeds. We're not going to have any loan payments this period, but we will have interest of 520. That's 1% of the 52,000. And when we add that all up, 52,000 minus 1,000 is 51,000 minus 520 is 50,480 for our ending balance. And so that's how we do a cash budget as we go along. Now, sometimes they will ask you to do a total cash budget for, like, you'll have 3 months and then do the quarter. It works the same way, except so you end up with a total column here. But be careful, because your beginning balance is going to be the November, so 75,000. Your cash receipts will be those two added together, right? And so that will be 975,000, giving you the total available of 1,050,000. And then your cash disbursements will be those two added together, right? And so that'll be an even million. Giving you a tentative balance of 50,000. You're going to have to do your loan proceeds. Again, that'll be those together, your loan payments, and then your interest payments will be those added together, 1,020. And you'll end up with the same ending balance. So that's if they ask you to do a total. They didn't in this case, but you can if they ever do ask you. All right, so that's exercise 10-28, and we'll move on to the next exercise.